Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Friends, in this video, I'm going to talk to the topic, are there opportunities in this market? We all know that valuations are elevated across the market. We know that every single idea we want to buy seems to be at a level which we are more comfortable watching than buying. The desired valuation in the stocks that we want to buy is lower or way lower than the present. Under the circumstances, should one just not do anything, or should one keep our eyes and mind open to something that could turn out to be interesting? When market valuations are like we see today, the first thing that an investor must consciously think about is, where can we be contrarian? I see many people becoming contrarian and buyers in commodity stocks, because naturally when you see the rest of the market overvalued, commodity stocks look relatively cheaper. But I am not a votary of doing that. On the other hand, there could be some sectors which are out of favor and which could remain out of favor for a long time to come, and then they could come back in favor. So between now and the time they come back into favor of the market, we have a gestation. That gestation is an opportunity to find new ideas. That space itself could be a very interesting space to focus upon, where stocks are out of favor and the fundamentals are reasonable, and someday we could see the fundamentals improve, making a case for an improvement in valuations. Typically, this is contrarian investing, as simple as it can be. So the case for being contrarian in some good spaces that are currently out of favor remains strong. But the important thing for you to remember is that you cannot put all your money in one go. You cannot take all your investment anxiety, all your fear of missing out into contrarian investment decisions and act in haste, because you could end up buying very early, you could end up putting more money than you should, and you could end up doing a combination of these two, which is buying for more money very early, which could all give you a lot of interim pain. So the key thing for somebody who wants to be contrarian today to understand is that you should try and minimize your pain during this phase when you wait for that sector or stock to come back in favor. The gestation should be comfortable, and you should be able to stay invested through that gestation and well beyond that. So you should not even lose patience towards the end of that gestation period. Towards the end of the waiting period, you should not feel, let this go up a little bit more, I want to get out. You will be able to avoid that feeling only if you handle yourself well during that period, which means that you need to be really measured, very relaxed and gradual in your investment decisions. You can't be hasty, you can't have FOMO, you can't rush to invest, and you cannot have a deployment compulsion when you go and do your investment ideation. When you look for what to buy, you should not buy with the mindset that, oh, I need to somehow put so much money into this. Then you will make only mistakes. So this is a market where a lot of work needs to be done, and ironically, the actions must be kept limited. This is not a market to idle. It's a market to be very active in seeking contrarian ideas. It's a market to look for what will do well into the future, long into the future. And after finding out what will do well long into the future, you need to pace your investing very gradually. So you need to set milestones and then increase your exposure to those ideas when every milestone is reached. And you must have a clear idea of how you are going to do this, and you must keep refining that idea as you go along. So it's not an easy market. What you need to do is not easy, but it's doable. In every bull market, I have found that we all can be contrarian, all of us can be, but we are contrarian in the wrong places. That is our usual folly, our mistake. something we can avoid in this market. So, we need to be contrarian in the right places where we recognize that valuations can go even lower, but the businesses are reasonably sound with the ability to bounce back very strongly if given time. So, that should be our focus area, that should be our emphasis, and with that emphasis we need to look at new ideas. And we would find at least a handful of contrarian ideas, and gradually we must add to that pool of ideas which we should track very, very closely. We should anticipate the new developments that will come in those stock ideas, we should prepare for them, and when those events happen we should be able to respond in our investing appropriately. Sometimes you should not do anything, sometimes you should buy, sometimes you should avoid buying. Ask yourself whether you know those companies which are your contrarian ideas well enough. Ask yourself whether you are very clear of what you should do with incremental news flows. Do you know what will be the incremental news flows? Are you anticipating something? Is your anticipation adequate? And if you get all these things right, then your preparation to invest in new ideas, even in a bull market, would start taking shape, and you will invest not in this bull market, but when this bull market recedes. The thing is, you will be investing in the right ideas when the bull market gradually recedes. And when sentiment turns, you will be very measured in investing in ideas where the market is not even looking, but you are looking, and you know that the market will start looking in reasonable time. So, that is the kind of sweet spot that we must all focus upon. In that sweet spot, we could find enough contrarian ideas, and those contrarian ideas will be the opportunities of the future. Investors take multiple cycles to learn this, but once you learn it, you must practice it very actively so that you don't lose touch of what you need to do the next time the markets are frothy and you need to invest money. Thank you for watching this video.